Good morning or good afternoon if you're out east. My name is George Littlejohn and welcome to CISI TV. As the light in London, I have to say, gets less and less as the days of the partial lockdown go on. We're delighted to welcome here today Richard Croft, who is Executive Chairman of M7 Real Estate, the first company to list on IPSX. David Delaney, whom some of you will have seen on CISI TV, in fact, perhaps live already, is Group Chief Executive of IPSX, a brand new property exchange. We'll come back to that in a moment. I should add here that Alan Ramsey, our Deputy Chairman at CISI and very good friend, both personally and of the Institute, is also a Senior Director of IPSX. Richard, we were talking again, chatting before coming on here about the overall nature of the property market in lockdown and with COVID. What do you think of the property market, particularly the office market?
Well, George, thank you. And thank you everybody for being here. As you know, my view on the office market is that we're in a little bit of a hiatus at the moment, but demand and need for offices isn't going to change dramatically once the pandemic is over. And the primary reason why it's not going to change dramatically is the human need for social interaction, for collaboration, for integration doesn't change. I don't think, in fact, if anything, the pandemic has shown that we need to be together more than ever. Certainly we've seen in our own business, the first 2 months of it, we got by pretty effectively remote working. But by month 3, our productivity was impacted just because, all the more junior members of staff were not getting the management that they needed. They weren't getting the teachings that they needed. And so on that basis, we think that people are going to congregate back to offices as soon as they can, reasonably sensibly. And we were talking to your colleague who is going to the office every day because she lives in a small flat, and all day there, sort of being locked in is almost like being in prison. And if you talk to a lot of particular people who live in cities, who either have young kids or relatively small accommodation, that's not a healthy place for them to be. And it's important to have demarcation between your working life and your home life. In fact, to be honest, I'm in an office here in Suffolk. I rented some space for a small team here because even for me, working from home every day meant that there was very little demarcation between being at home and being in the office. And for me, that's absolutely not healthy.
But you see a change coming in the way people use the offices. In other words, how often they go.
I do. I mean, to be honest, I think that change was coming anyway. So, if you look at your phone and your iPad and your computers, the fact is you can do things much more effectively in different times as well as different locations. Remote working doesn't mean working from home. It just means working from somewhere else. But if you think of all the millions of people in the world who traveled a lot of them have been remote working for a long time, and myself included. M7 is quite a large international business. I spent most of my time on planes. I've been remote working ever since the business was started. But that still doesn't mean that I don't want to be in the office and collaborating with my team. So I think one of the things that might change is that, there's certainly the allocation we have to desks and the allocation we have to collaboration space, meeting rooms, breakout spaces, that kind of thing. I think that'll change over a period of time. And people are going to want slightly more from their offices, a better experience than they've had previously. And we've already seen 10 years ago the way that companies like Google were retooling their office space. That is the direction of travel. A lot of us laugh. I don't now, but they're looking at some of the things when they were building slides in their offices for their teams, that kind of stuff. Actually, that all looks very sensible now. And I think that the office is going to become as much a social engagement as a work engagement. And I think that's a positive development.
Fascinating, thank you. Now, David, ironically, one of our last live events before lockdown hit us was pre-launch of IPSX. Since then, you've launched the market. Can you tell those who didn't see the original program on CISI TV a bit about IPSX, the background to it, and where it's heading, what the strategic direction is?
Of course, thank you, George. Yes, and I think you're right. I think one of the last things we did pre-lockdown probably was coming to your office in the walkie-talkie to talk to your colleagues. Let me just give you a little overview of IPSX. What is IPSX? IPSX is a stock exchange. We have our technology from NASDAQ. We settle Crest Euroclear. We have market makers such as Panmure Gordon, Peel Hunt, WH Ireland. So in all respects, trading equities on IPSX is going to have exactly the same look and feel as trading Vodafone shares on the London Stock Exchange. The key difference is that we're focused on single asset, institutional grade, commercial real estate. For example, the Gherkin. Currently, in simple terms, if you own the Gherkin, your choices are own the Gherkin or sell the Gherkin. If you want to sell the Gherkin, you've got a limited number of people you can sell it to. You can sell it to super rich billionaires. You can sell it to sovereign wealth funds. You can sell it to large institutions like BlackRock, all of which are probably specialists, all of which probably value it to within 10 basis points of each other. What we say is, we'll give you, as the asset owner, an alternative. Take the Gherkin, put it in an SPV, a company under 2006 Companies Act, let's call it Gherkin REIT PLC, floated on our stock exchange, minimum free float of 25%, maximum free float of 100%, maximum loan to value of 40%, and now you get 3 extra benefits. The first benefit is you don't have to sell the whole of the Gherkin. You may say, actually, I quite like the Gherkin. I'd just like to sell, say, 40% and to take that capital and to develop other projects. The second key benefit is that you appeal to a much, much broader and deeper pool of capital. As opposed to appealing to just those small, huge investors, you now appeal to everybody from the man in the street who wants to put, say, £1,000 into a SIPP ISA, all the way up to BlackRock and everybody in between. So now you're attracting a huge, deep pool of capital into your asset. And the third benefit is that you can, if you wish, retain the asset management contract of the building. Obviously, a building like the Gherkin needs to be managed, and so you have to have an organisation who's doing the asset management. Oftentimes, companies will say, well, actually, that's a very valuable contract to keep the asset management, so I could sell part of the building and retain the asset management contract. If you're doing a direct sale, you wouldn't be able to do that. So from an issuer point of view, you get 3 extra benefits if you look at IPSX as an alternative. The ability to appeal to a much deeper pool of capital, the ability to have more flexibility, and the ability to retain the asset management contract. If you're an investor, you get the ability to actually buy a piece of institutional grade real estate that normally you wouldn't get an opportunity to do. Currently, if you're an investor, you get the opportunity to, invest in funds, or alternatively buy small pieces of real estate. The ability to buy, large buildings, 200, 300, 400 million pounds, to buy a share in that is normally reserved for the very biggest investors in the world. So at IPSX, by listing buildings on our exchange, it's giving a whole range of investors the ability to invest in these institutional grade buildings, but also to invest it with a background of regulation. We're regulated by the FCA. In liquid markets, we have daily pricing by our market makers I mentioned before, Panmure Gordon, Peel Hunt, and WH Ireland. So you're never in a position where the piece of real estate you're invested in gets gated, and you get great transparency. Some of the rules of the exchange ensure that the issues, the underlying asset and the issue has to be valued every 6 months by one of our approved values. So, JLL, Knight Frank, Everson Young, these sorts of people. As a public company, you're getting annual audited accounts and 6 monthly accounts. And there's a whole number of things that we're going to provide to an exchange in relation to increasing the transparency of the asset for the investors. For example, one of the things that has become very clear over COVID is the need to understand the underlying tenants, the need to understand if the tenants are paying the rent. One of the developments of the real estate industry with COVID is the fact that the tenant doesn't always pay the rent. Some tenants absolutely do pay the rent, but some tenants, are challenged and don't pay the rent. And so as a result of that, understanding the underlying tenants and whether they're paying the rent or not becomes a really vital part of real estate investment. One of the things that we're doing in IPSX is working with a fintech company that will provide free of charge on our website to all potential investors, an analysis that gets updated on a daily basis of the forward-looking credit worthiness of all of the tenants. It then takes that information, it converts it into an assessment of the overall likelihood of default of the overall asset, and gives it an equivalent of an S&P bond rating. So therefore, at your fingertips as an investor, you get the ability to see, an assessment of the overall asset and how it would compare to an S&P bond rating, and then you can delve into an analysis of each of the underlying tenants and their own credit worthiness and how they compare to the asset overall. That, I think, is groundbreaking in relation to real estate investment, bringing that level of transparency with the daily liquidity, with the regulated environment from the FCA. That's new and that's very, very different. And I think transformational in relation to giving all investors access to these institutional grade pieces of real estate, and then the transparency that they need to understand the investment that they're potentially getting into.
That's intriguing about the credit ratings of tenants, and just thinking about the Gherkin specifically, that while I guess in the old days, businesses in insurance would have been regarded as great on the credit front. Now with the climate challenge, some of them face huge existential risks, so they might just be having big problems. Not that I'm commenting on any individual insurance companies, of course, but intriguing. Richard, you obviously saw great potential in IPSX and brought M7 or the mailbox development of Birmingham as a REIT to the market. Why do you see IPSX as being so important, and why was it good for mailbox? Can you start by telling those of us who don't visit Birmingham that often just a bit about mailbox itself, please?
Yes, the mailbox is, I'm going to describe it as a ground scraper. It's a 4.8 acre site right in the heart of Birmingham. So an absolutely vast estate, one of the largest mixed-use developments outside London, 680,000 square feet of offices, of, oh, so my lights have just gone out, I'm sorry, excuse me just a second, so I just turn the lights on.
Of course. I have property troubles.
But no, that's the advantage of having a smart building, you know, because I've been sat for the last hour and a half. Yep. Lights just went off. Anyway, so it's a ground scraper, massive estate, and it's got a wonderful combination of offices and amenities. It's got a slightly unfortunate reputation for being a retail centre. It absolutely isn't, but we do have a Harvey Nichols in that. But we are taking out the majority of the retail to convert it into office. And one of the things that is very unique about it is it has a very large car park, which we think in the post-COVID world is going to come in very, very, very handy. So it's got the largest car parking capability of any office building in Birmingham. But Birmingham itself is a city that we're very bullish on. We're quite bearish London, actually, to be honest. We think London has probably gone its growth. And we think London gets probably impacted by two things. One is affordability, and two, this mass transit change that we see coming, where people not wanting to congregate, you know, or come up at 5:30 in the morning and get on a train. But Birmingham is actually a sort of slightly different city in the sense that affordability is much better. It doesn't quite have the same mass transit approach as London, and us, let's say, having a car park. But one of the things that I particularly like about the mailbox is our average rent is only £21 a square foot. And one of the things that I like very much about Birmingham is that Birmingham has 5 universities and has the youngest demographic of any city in the United Kingdom. And here's an extraordinary stat: 50% of the students that come to Birmingham stay. And the reason that they stay is because the city is affordable and improving. And then when you've got developments like the mailbox, you know, so another thing that attracts people to it, because it's got a tremendous social scene, it's got a tremendous office offer, and then we'll be adding to that amenities like doctor surgeries, etc. So you get a live, work, play balance, which we think is very, very, very exciting.
That's the best sales pitch I've ever heard for Birmingham. Very impressive indeed. I will visit more.
Just join the Birmingham Tourist Authority, and if anybody wants a tour of Birmingham, please do get in contact with people. And even if it's by boat on the Grand Union Canal, people know that.
Sounds idyllic. Thank you very much. Why bring mailbox as a REIT to the market? What was the motivation there?
Well, I've got to be honest. I bought the mailbox specifically to list it on IPSX. So I'm a director as well of IPSX, and N7 is a major shareholder. But I mean, I believe wholeheartedly in the exchange and the concept of the exchange. So, you know, one of the things that I was sort of, you know, I want people to think about is real estate is the largest industry in the world. Capitalism, real estate is. Every part of our life is touched by real estate. Whether it's the office that we might work in again in the future, whether it's the warehouse that stores the Amazon goods that get shipped to our door every day, whether it's the supermarket we shop in, whether it's the house that we live in, hopefully the leisure center we'll visit again. I mean, you know, the theater, everything is real estate. It dominates our life. And yet extraordinarily, the real estate industry doesn't have a capital market of its own, a liquid capital market. And one of the nirvanas, one of the ultimate goals of real estate has been to make real estate investing liquid. And IPSX does that. And also one of the big problems is that if you're an individual investor, at the moment, you can't really participate in the commercial real estate markets unless you either invest in a REIT on the London Stock Exchange, which means you have to invest in the big portfolio of whatever they have, and also expose yourself to management that may or may not write the sort of decisions that you would want to see. Or you invest in the open-ended property funds, which, they've had massive liquidity problems, get gated all the time, and they're just not very efficient either. So the combination of REITs that often trade at discounts because people don't believe in V, and the open-ended funds means that actually a lot of people can't get into those markets. Or alternatively, you're really, really, really rich, and then you can. But of course, the vast majority of people can't afford 180 million pounds to buy the mailbox, or the 1 point something billion that would be necessary to buy the shard. But IPSX allows commercial real estate to be democratized, and means that you can liquidly trade assets directly on your phone, or because it is an electronic exchange, just like the London Stock Exchange. It means that individual investors can build their own property portfolios. And if you think about that for a second, it's a hugely exciting development, because in the next 10 years, what COVID, the pandemic, has done is guarantee just about that we're going to have zero or negative interest rates for the next 10 years. So income annuity is going to be singularly the most important thing for any investor. And I want everybody on this call to think about this just for a second. Most people invest in shares for a dividend. At least they told me that they did. I mean, obviously, if you invest in Tesla, that's not for the dividend. That's just for the wild ride that you get. But most other shares, you invest for your dividend. But think about this. So take a company like British American Tobacco, which, let's just ignore whether or not they're a good firm or good people to be associated with. But you'd buy that share for its dividend, because it's, a dependent, a totally reliant dividend. But if you buy the piece of real estate that British American Tobacco is in, they pay their rent well before they pay their dividend, because it's a cost just like salaries. So if you own the real estate that companies are in, they have to pay you before they pay their dividend. So if you are interested in cash flow and you're interested in income, real estate is still the best asset class of all. And here's just a little thought. That's why people do so many buy-to-lets, etc. But here they can build their own property portfolio, and over the next 2 or 3 years, we hope hundreds of buildings will be listed, and people will literally be able to build their own, like a massive game of Monopoly. This changes the world. And the other thing that I'm excited about, this is a great British piece of innovation. This is a market that we can export globally across the world. It's a great piece of fintech innovation. We've got the support of the FCA. So no, it is really, really important that people get behind this, because this has the capacity to literally change the world, and the exchange has the capacity to be Britain's next unicorn.
This is fascinating here, not least because we're hearing of fintech is actually working in a real life financial environment. Before coming back to investor reaction, Richard, David, this great new property democracy that Richard talks about, what's the pipeline looking like now for future issues on the exchange?
The pipeline is looking very healthy, actually, George. I mean, one of the benefits of COVID, the fact that it allowed us to spend a little bit more time developing the pipeline. We were originally going to see M7 listing the mailbox earlier in the year, and obviously COVID has delayed all that process. We've now got, in addition to M7 bringing the mailbox at this time, we've also got another 4 assets across our exchange that we expect to be coming between now and Christmas, and then a further 30 assets in the pipeline at different stages of development, which we're seeking to bring during 2021. So the pipeline is extremely healthy. It's across a whole range of different assets, whether they're regional assets, whether they're London assets, whether they're industrial assets, whether they're office assets, whether they're social housing assets. And again, to Richard's point about giving investors opportunity, there's a range of different assets that investors will be able to choose from. We recognize that not all investors like all assets, and so therefore the ability to have a range of different assets, and as Richard was saying with the example of REITs, the ability to choose what it is you want to buy. Some people will want to invest in a Wembley Stadium. Other people, that'll be the last thing they'd ever want to do. Some people will want to invest in, you know, Manchester real estate. Other people would want to invest only in London real estate. So, you know, having a range of different assets in the pipeline will ensure that we're going to appeal to the broadest range of investors possible.
Thanks, David. One of our you mentioned social housing. One of our members, Johan Cordoba, and apologies for the pronunciation if that's wrong, which is bound to be, but Johan asks about what success cases there are in listing residential property SPVs.
Sorry, what success cases there are?
What success cases are there in listing residential property SPVs?
We're not going to be focused specifically on residential property. The closest we'll get to that would be social housing type of deals. So yeah, to be clear, the mailbox that M7 is listing is the first asset to appear on IPSX. This is our debut IPO. To be clear.
Okay, thank you. Coming back to Richard, what's the investor reaction been? And indeed, David, how have investors reacted to the listing?
With a lot of interest. This is sort of slightly historic, though. So, being part of the first ever listing on a brand new stock exchange, you're not only having to convince people of the sense of the mailbox, you've also got to convince them of the sense of the exchange as well, because this is something that is entirely new. Anyway, having said all that, we've got a lot of interest. We are trying to ensure that as many private investors as possible are able to participate in the listing. I mean, for us, it's hugely important that that we have a very, very wide spread of shareholders, because that gets more people engaged with the exchange and with the offering. But the reality is we will get this listed. It will start a revolution. I mean, I really, really believe that. But so investor appetite is strong. It's a question of corralling it so that we get the best investor mix for this particular asset, and also the best investor mix for the exchange. The more people get involved, the better.
Okay.
George, let me just add a couple of things onto that from an investor point of view. What I think is interesting for the exchange, if you think about it, investors historically, they have equities, bonds, and alternatives. Real estate has historically fitted into alternatives. Bonds now yield 0. That's not changing. When you listen to the Federal Reserve, you know that rates are going to stay extremely low for an extremely long time. National Savings have just cut their interest rates, I understand, to 5 basis points now. So you've got a whole asset class that to many senses is now uninvestable. Whether you're the man in the street, whether you're an insurance company or pension fund that's been doing asset liability matching for the last 30 years, you've now got this big hole in your portfolio called bonds that yield nothing. So what we're doing is taking this £950 billion asset class called commercial real estate and making it liquid, transparent, and regulated, which, given that real estate has a lot of characteristics of fixed income, stable cash flows, inflation linkage often with the way that rental payments work, you're giving investors across the spectrum access to an asset class that they now desperately need. And to all intents and purposes, a new asset class, given how they can invest in it now versus how they could have invested in it previously. The other thing that I think is super interesting in relation to this is the relative value play. Richard was talking about the example of British American Tobacco and where, rental versus dividend is in the waterfall. An extreme version of that obviously is Lloyds Bank, that's not paying any dividends whatsoever, but obviously is paying the rent in its offices. To me, what illustrates the power of what we're doing at IPSX is, I own a Tesco's bond. Tesco's 5.5% to 33. It's got a yield to maturity of around about 1.5, 1.6%. If you took a Tesco store, superstore, listed on IPSX, say a £50 million asset, that's going to have a dividend to investors of around about 5% probably. Depends on leverage, but it'll be something like that. So you've got basically the same covenants, you've actually got an asset-backed security in this instance because you own the company that owns the buildings leased to Tesco's on a long lease. So, you know, the relative value play becomes compelling. I can sell my Tesco's bond yielding 1.5%, and I can go and buy the Tesco's credit for 5% as an asset-backed play. That's fabulous. As an investor, and thinking selfishly of myself, owning that Tesco's bond, which has been a great investment, but how compelling is that in this world of super low interest rates that we know isn't changing in the foreseeable future? You know, we could be in a position where base rate's not going to be 5% again in our lifetimes. So the ability to access this type of income stream, you know, higher up the waterfall than you would be used to in a very, very low interest rate world, and actually with the added advantage of being real assets. And we know the great push that investors have had into real assets over the last year or two, you know, with all the discussion about, you know, potential inflation risk and QE and all of that sort of stuff, to be able to then buy, you know, these type of assets that give you that slight inflation hedge, that give you that security and confidence of cash flow in a world where bonds yield nothing, is, I think, unbelievably powerful for investors and unbelievably timely in relation to offering investors that opportunity.
Thanks, David. You're building up in Britain. You've mentioned the international dimensions to this. Many of our members are spread across Middle East, Asia, Africa. How do you see future expansion, and which markets would be particularly attracted to bringing assets to IPSX in the UK?
Okay, I mean, I think. Oh, sorry, Richard, you want to?
No. You.
Okay.
You're the executive of the exchange.
The vision for the exchange is to have a series of exchanges around the world. If you think of the secular drivers for why IPSX is in demand at the moment, you know, I think of three secular drivers. The first is, ever since 2008, regulators prefer exchange traded to OTC markets. The second is the global savings glut, which means there's excess capital globally looking for a home, looking for quality assets to buy. And the third is the super low interest rates that obviously got even lower with COVID. Now, if one thinks of those criteria, there's a certain number of markets that immediately spring to mind. The first market that immediately springs to mind for me is Germany. You know, it's got a yield curve that's pretty well negative from 0 to 30 years. You know, it's got a mature pension insurance industry that is desperate for, you know, quality cash flows. So, you know, one of the discussions that was had within IPSX some years ago was starting a discussion with the Dutch regulator about an Amsterdam-based exchange. You know, the emphasis then shifted to the UK, and the idea of having a London-based exchange, which has now come to pass. You know, I was in Germany earlier in the year before the lockdown, talking to investors over there about the idea of looking at a Frankfurt or an Amsterdam-based exchange. You know, to me, that's the next easiest one to do, with where you're looking at, you know, sort of Dutch, Belgian, French, German investors looking at EU27 assets. I think whilst we could list European assets on the London Exchange, given Brexit, it's going to be safer to look at having an exchange in the EU27. If you then look further afield, you know, Japan obviously strikes one, has had, you know, pretty well super low interest rates for the last 20 years or so. You know, you look at the US, that clearly has got to be interesting in relation to, you know, the maturity and depth of the market, the investor base. So there's a whole range of different areas where we can see opportunity to export IPSX as a concept once we have proof of concept in the UK. You know, as Richard said, this is really interesting as something that we can take as sort of fintech and innovation and export it around the world as a British invention, which is fabulous.
Thanks, David. Richard, where will this invention land, do you think, over the next few years? Which are the prime markets?
Well, I mean, you know, one hopes across Europe, and I think, you know, obviously we could create an exchange both in Asia. I mean, many of the Asian markets would suit such a thing. But also, I mean, there's almost nowhere on the globe that the concept of being able to list liquid real estate wouldn't be well received. and nobody's done it before, unbelievably. And it's taken us, a long time to get here. We're fully regulated by the FCA, but now that we are, and once we get the first asset done, I think, it's like sort of climbing up a mountain. It's quite hard to get up to the top of the mountain. But when you get to the top, coming down is an awful lot easier. But I think we're not far from the summit now. And once we've proved that it can be done, it's like when Hillary first claimed Everest. The wall of people who've gone after him is because it could be done. And I think this feels exactly the same way. So once we get it done here, I think the world is quite literally our oyster.
This is fascinating. Going up mountains, one often comes to the bit where you're nearly at the top and there's just another little hillock. Gary Webb has raised a little hillock question about, will the model work in non-common law jurisdictions? Will you be able to perfect the security interests over the asset in countries like France, Italy, Spain? You will have thought about that, I'm sure.
Yeah, I mean, we're taking asset and we're putting it into an SPV. The SPV owns the asset, and then we're selling shares in the SPV. There's been nothing that suggested that the ability to do that won't work in other.
There are plenty of Italian, French, and Spanish routes. Dubai, for example. So if you believe that you can legally own an asset in that country, and they have REIT type structures, which all those countries do, then yes, the exchange works perfectly well there. Because as David said, what we're actually doing is listing a business that happens to have the sole business of owning an asset.
Well, David and Richard, we've come to the top of Everest first thing on a bleak Tuesday morning here in London, and this has been absolutely fascinating. I think particularly the scope for high yield is the perfect part of the view from this mountaintop. And we've heard about these great uses of fintech, a real practical deployment of fintech. And we've been offered a tour of Birmingham. So what better way to start a Tuesday morning or afternoon if you're in Asia than this? David and Richard, thank you very much for doing this. Thank you all for watching live and on demand later. And we must get you back again, if we may, perhaps early in the new year for an update on the market and how Birmingham is going. So thank you very much for watching. Thank you for speaking to us today.
Thanks for your time, George.
Thank you.
CIS.